You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. And as always, we're joined by K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Good morning, Shelby.
Dan, kicking off our grain market conversation as we usually do with talking about what you're seeing for futures.
Well, the futures responded to what was a big day information-wise. So the USDA came out, and in particular, the USDA National Agricultural Statistics, I can't say it, Statistics Service, NASS, and gave their prospective plantings and grain stocks reports. And of the two, probably the prospective plantings report was the bigger of the two. And when you look at the futures, you can get an idea of how tell the story of how the market, at least initially, responded to these. Corn yesterday, again, Thursday, March 28th, ended up for the May contract, lead contract, up about 15.5 cents, and Dees corn up to 15.5. Now, still these corn, and that's what prospective plantings are really about, it's really getting at. They still traded about 477, 478, has actually closed to 477 and 3/4. But we've been down somewhat lower than that, and as the market was again, biding time is, I guess, a good way to put it. So we had that, and you can see also that same sentiment carried through in what was kind of a neutral stocks report, as I understand it, for corn. On the soybean side, well, and we'll talk about the reasons for that. Soybeans were just so. Lead contract down a penny. November at 11.91. November, the harvest contract at 11.86 and 1/4. And generally, we had larger than expected soybean planted acres, lower than expected corn planted acres, and interesting that the corn responded to the high side by moving up somewhat, and soybeans basically neutral. So we see somewhat from that the attitude of the market towards all this. And then the Kansas City wheat contract responded up about 5 to 7 cents. Generally, there were we'll look at the specific numbers for wheat, but on winter wheat, generally a lower number than had been expected in terms of winter wheat seedings, hard red being part of that. So a little bit of a positive move from that. So overall, in a nutshell, when you add all that together, the market voted with its prices in terms of responding yesterday, a little bit positive for corn, about neutral for soybeans, and for the wheat complex, just a little bit positive.
And we'll talk about that NASS report here shortly, but before we get to it, what did you see for cash, Dan?
Not a lot of changes. Still, corn prices, spot corn prices, with the low of 422 in the southeast part of the state around Columbus, and a high of 462 again in Garden City, but only a 20-cent over basis. Anything but a gangbusters positive, strong basis level for corn. Even in Garden City, we'd have to go forward, have dry conditions, crop threats to see that cash price probably, the basis strengthen and cash prices move higher. New crop bids. It is interesting to see the new crop bid in again, Garden City, 493, creeping closer to 5, and a range of other bids. I guess a low, the widest bid again in the southeast part of the state, 448 for corn, and then other than Garden City at 15 over at 493. 463 in Hutchinson being the next highest. So you take the corn market in stride and compare the sorghum market to it, and generally still continuation even after this data come out, a continuation of a bit stronger grain sorghum prices than corn on the cash markets, and new crop bids being a little bit lower. So again, whatever set of factors is mainly exports that are driving the relatively positive grain sorghum market. There must be a thought in the market that they're not willing to bid new crop bids for sorghum up higher than corn. They must think there's some chance of what's currently happening unwinding itself, to be as a way to say it. Soybeans, not a lot of change. Again, the highest cash bid is in Hutchinson at 466. And really, you kind of look at the soybean markets, kind of an eastern 2/3 versus western 1/3 situation. Eastern 2/3, Salina, Topeka, Hutchinson, Columbus. Again, prices above $11, 11 and a half, 11.66, as we may have mentioned for Hutchinson. Then you fall below $11 out in the west. And new crop bids really pretty consistent. On the highest side, 11.26 in both Salina and in Columbus, over 11 in Topeka, actually over 11 in Garden City as well, and 11.46 in Hutchinson. Wheat prices, it's hard for me to gauge what's going on as we drive around the country. We just got some moisture. We've got cattle out grazing, even in northwest parts, normally the Southwest Enterprise. Cattle grazing on wheat stands here within the last few days as we've seen them. So the moisture is sure welcome in these western parts. We've got some lush growth going on still, keeping our fingers crossed, hoping for no cold temperatures that could surprise us. But with those positive prospects, you still see cash prices at the highest in Hutchinson and Salina at 565, and also Topeka 565, and lowest out west, particularly in the Colby area. New crop bids, the highest ones, 550, 545, 555. Again, kind of amongst the tri-lead markets in the state, Salina, Topeka, and Hutchinson in that manner.
And Dan, going to talk then some about that Perspectives Plantings report from the National Agricultural Statistics Service and giving a few specific numbers with it.
I think the real numbers again revolve around corn in particular, and then soybeans. The prospective plantings figure for corn in the United States was 90.036 million acres, basically a little over, just marginally over 90 million acres, and that's a bit lower than industry expectations. The average expectation was more like 91.5 to 92, and this came in right on the very bottom of all that, right there at 90. So again, hence the move to the higher side. When you look at what happened in Kansas, we're for corn down just a little less than 1% at 5.7 million acres. But where you see the biggest drop offs would be in Indiana, down at 5.1 million, down 6.4%. There in Iowa, 10.9 million acres. Excuse me, Iowa at 12.8, down 2.3. Illinois at 10.9, down 2.7. Minnesota down 8% to 7.9. So you've got a number of those areas that shown fair drops. Really, the only state that's near us that has had an increase. Well, both Colorado, 1.4 million acres, up about a little over 5%. Oklahoma at 400,000 acres, up some. So a little bit lower corn, and you go right from that over to soybeans and see that the soybean acreage projected at 86.5 million, up 3.5%, and that's really pretty much in the middle of what was expected for the market at about that 86.5, and hence I guess so the market was very responsive today to that factor. And on a state by state basis, for Kansas, we're down 4.25, about a little over 4%, 4.1% at 4.25 million acres. And again, the three I states, you look at pardon me, Iowa, 10.2 million, up 2.5%. Illinois, 10.5 million acres, up 1.4. Indiana, 5.75, up 4.5. So just interesting to watch. We in particular are wondering about what this report showed for hard red winter wheat acreage, and the numbers that came out for U.S. winter wheat again, in December, we had a report, but we here in this March report, just right on the very bottom of trade expectations. So again, a little bit of support. In Kansas, we were pegged at 7.7 million acres, down just under 5%. And that's pretty common. In fact, other states around us a little bit lower. At the very end of this, just to wrap up, I'd like to mention a little bit on stocks. So at the when you look at the grain stocks reports and try to perceive what they're telling us, really the big surprise for stocks were in wheat stocks. Again, you had a number that came out that was at the very top of pre-report trade expectations, and that's a bearish move. So the acres were down, stocks were higher. The stocks were higher. That means we're probably not feeding as much wheat as we thought we might be. When you look at for soybeans, expectations right in the middle of the road, not any major changes there. And for corn, expectations towards the low side of all that was in there, but so a little bit lower stocks than had been generally expected for corn. And again, so you get those two factors: a little bit lower than expected stocks, a little bit lower than expected acres supporting corn, and pretty much neutral figures for soybeans.
Dan, I appreciate you taking the time to join us today and give us our grain market update.
Thanks. Take care, Shelby.
That was K-State grain economist Dan O'Brien. I will link these NASS reports in today's show notes on agtoday.net. We're cutting to a short break now on Agriculture Today, but we'll be back with more ahead.